That's a good good opportunity there. Missed, unfortunately. Is what it is. You win some, you lose some, you miss some. But at least we identified a opportunity there. Yeah, so this is an example, right? Whenever we open up, price doesn't really leave liquidity during Asia, but then price just trickles down during Frankfurt, breaks lower during London, gives a fake reaction of something, breaks even lower. We look left, there's nothing else to take. See how we react off these zones. We had the reaction internal breaker structure here. Very clear now, obviously looking at it. I think it's because I was clicking through 3 different pairs. We had that mitigation, beautiful bullish engulfing, and then look at the release of liquidity there. Bang, 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 bang. The interesting part about everything, right, is that everything that we're looking at, apart from certain little moments in the market, is all just traps. When you can understand that and you can look at the market and realize that everything that you're looking at is not an opportunity, it's actually a trap. It's inducing people to open orders in the market. There's only certain moments where we would enter, hence why we wait for all of the confluences, the liquidity to build up, the fake breaker structure to potentially present, the inducement to happen, which creates obviously imbalances, instability emotionally for most people, and then the opportunity gets created. Once the opportunity is gone, that's it. The move's made, the cycle repeats again. It traps and traps and traps and traps. So that's why we need to become a detective and just pull the pieces together, be patient enough not to pull the trigger until everything that we're looking for is met. Oh my god. I was just about to click. I was literally just about to click buy.
Same.
My phone is open.
Exactly same.
Right, I'm entering.
Yep, same.
So make it 3 pips stop. Just shy. Yeah, we've got a nice bullish engulfing to continue on the 3 minute. So let's see if this holds. So if we got in at the bottom, because we was already up significant, we could have waited for that reaction and got a re-entry there. So this is one of those opportunities where you can maximize your profits, not just by holding one position, but by understanding that this is not a significant zone. This is just the most recent low high. The biggest stop loss is there because that's what made the new low. That was the last lower high, which actually took the structure low here, right? So lower high, bang, this made the low. This is just a fake reaction off the SMT to go long. So that definitely wasn't the initial move, but we're looking good so far. So if this candle now comes up above here into the demand and closes, we can just shorten the stop loss just a little bit, just to decrease the risk a little bit more. Yeah, this is good, this is good, this is good. So look, so here, right, so remember this, right? So let's say we're in profit from these lows. Rather than taking profit at a random point there, always look to the left. If there's a move down like that where it's got loads of imbalances to fill, right, you target the POI or the stop loss. You never get out there because there's literally no reason whatsoever for price to just do that. It has to have intention. It has to have a reason to do that. Remember that, okay?
Euro's climbing now.
Okay, good. So if you ever...
Wait for this candle to close and then move the stop loss up, yeah?
Correct, yeah.
Beautiful.
Come on.
Beautiful. Nice.
Yeah, you can do that. You can put stop loss to... Well, it might to get out. It might mean to put the stop loss at break even. So if we do that, that will be just shy of 1 to 4. Okay. You can take off 80%.
Oh, it just reacted from SMT.
This is exactly what I'm saying, right? So you always want to be if you're trading such a small range, you want to make sure that when it comes into the SMT and it starts reacting really fast, just close it, because you don't know if it's going to react and literally come down, or it's going to have a fake reaction and go. There's no point risking the profit for what? Another 2.5 pips.
So, would you say close now, or just?
No, just leave the rest, because the reason why we leave runners is when we've taken significant profit, we want to see if the runner will run to the actual target profit, and that will obviously give you a little bit more. So those little extras, you just leave, because you've took majority profit and you're completely okay with seeing if it hits or not. Does anyone have any questions regarding this entry? Anything you're unsure about? Any clarity that you'd like to get?
You could explain it a little bit.
Okay.
I have an idea, but...
Of course. So first things first, yeah? So we'll just break it down quickly. So we've got a previous SMT there, which got mitigated. So we said that there might be some potential entries here.
Yeah.
Right, so stop loss. Then we have that, obviously we looked at it on a higher time frame. We was looking to see, because on the overall, we was already trading downward, right? So the momentum was to the downside. We wanted to mark out the most recent relevant zone to the left, because when we looked at the day, where are we? We looked at the day, the most recent significant zone, which was the previous daily low as well, was already swept, which was there, right? So at this point, we didn't know if price is going to continue going or not. We wanted to mark out the next zone lower just in case. So what we would do then is, as soon as the previous daily low gets taken, we know that there is potential stop losses above. There is a lower high that's been created here, which basically left an SMT. So we've got breakout traders enter sells, stop losses above, where the fake reaction off the SMT and then push lower. Now, what do we know about an SMT? When we get a reaction, what do we know just before an inducement? What happens to the SMT traders?
What if you get a reaction off the SMT?
Yeah. Who are the last
They'll
people?
enter.
Who are the last people to get stopped out?
Oh, SMT traders.
That's right. And look what happened. Literally, price came into it, gave the fake reaction just above the previous daily low, right? So this is the difference between a POI and an SMT, because we go off the extreme zone rather than the decisional. Exactly, right? So look, guys, that fake reaction, and again, guys, if you're ever unsure about whether it's an SMT or not, what would we do?
Wait.
That's it. It's literally that simple. If you're don't go against your own intuition and your own knowledge, just go off what we already know is true, which is, if we're unsure, we wait. Because then once you wait, do you know what you're going to get? You're going to get ultimate clarity with what's going on, which we did. We took the SMT traders out with speed and momentum. We looked left, there was nothing else to take. Obviously, we missed the initial entry because we was flicking through different pairs, but we waited for, one second, let me just, that's it. Look, SMT got taken there, price pulled lower, bang, beautiful bullish engulfing on a 5 minute. We'll break it down to the 3 minute. This was the POI, which you already got marked out. This was the POI, look, bullish engulfing off the demand. Price came back, so then we broke it down to the 1 minute because it came quite deeply in. So obviously we don't know from this eye looking at this, if we remove this little box, we don't know whether it's going to react on this. So obviously we need to break it lower, because if we break it lower, we've got a smaller zone there. So now what we do is wait for a reaction off this zone. If we have a significant reaction like we did, bam, 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 or even on the 30 seconds, look, see, this is the difference between the 30 seconds and the 1 minute, is that the 1 minute candle closed there. So that was the confirmation. So you'd have had to get a 3 pip stop, or obviously for a safer entry, a 4.4 pip stop. But on the 30 second, you could have got away with just a little bit shorter. 2 pip stop. Or if you wanted to, obviously that didn't fully break that internal high, but it did engulf this candle. So if you wasn't sure, you would have obviously got in on this one, which is still 2.7, right? So then you target the highs there. Oops. Or you target the highs there. So we literally broke it down from 15-minute to 5-minute to 3-minute. Yeah, previous day low got taken, we induced low. Liquidity is being trapped to the downside. We can see that clearly. There's not really any buyers, right? The only buyers with the SMT. The SMT traders were closed. The last ones to get taken out. They get stopped out. Then the real move happens. And that's how it rolls. That makes more sense?
Yep.
So that was obviously the main entry. Yeah. The second entry was we needed to wait for a breaker structure away from the SMT and then the breaker structure back up again, right? So on the 3-minute, look, basically we've got the exact same thing. We had a reaction, we had a bullish engulfing. So that was technically the POI there.
Yeah, I can hear you.
Yeah, my Wi-Fi just stopped working.
Was it you that crashed?
Yeah, it was me. My Wi-Fi just...
I didn't know if it was me or not.
Just wait. Sorry, yeah, what I was saying was we basically look for the exact same thing off the SMT in alignment to what we're looking for, right? Look, we've got the POI here, we had the internal breaker structure, we had the mitigation, we had the continuation. Here, we broke out, look, we made a little structural break lower, and then as soon as we made that structural break lower, we immediately took and pushed back up again with speed. Okay, back, stalled, bang, took off, which is when we literally got in.
Yeah.
It's the exact same. Obviously, with practice, this comes easier, but we always want to look for the most important things, which is the demand form first, so as in prices stalling, slowing down. After the inducement, we have a reaction away from the inducement, preferably real breaker structure and internal breaker structure. We wait for a mitigation. As long as we've got liquidity there, no fear, you wait. As soon as we get the vector candles or bullish engulfing, bearish engulfing, whichever way it is, bang, you just take it.